Yo, what is up guys? Trader Main here. Wanted to put this quick video out here. What I've had my editor do is take a bunch of the concepts that I talk about in my various streams. So swing failure patterns, order blocks, breakers, ranges, market structures, all those kind of keywords that you might hear and you're like, hey, what does that actually mean? You're asking in the chat. Good chance I've answered it before. And so my editor's put in a bunch of hard work and he's gone through previous streams and he's scraped together bits where I actually explain these definitions and he's compiled them into this one video for you. I hope you enjoy it. If you aren't following already, make sure you're following me on Twitter, TikTok, and Instagram, all under the same handle, and YouTube, of course, at Trader Main. You have a swing high here, a low, a high, a higher high, and then a lower high. 3 candles make a swing. This candle went above and then closed below. Bearish SFP. You have a low, a lower low, a higher low. 3 candles make a swing. This candle went below, then closed above. Bullish SFP. That's what's acting as resistance right now, is this fair value gap. Fair value gap, just inefficient price action. This is only going down, so there's a gap there. You can see here, there was a gap, got filled. This is not a gap, there's wicks, right? This is a big candle, but this wick trades down into it. A gap is like this, when there's just that huge candle and there's literally 0 upward price action. This is a gap between here and here. This is down only, and look what happens. Almost all of it gets filled. So generally, you see sometimes these things get filled. I'm gonna show you one more thing here. One more piece of alpha. Key level, order block, key low. We have a key low here that we ran. This is an over-under play. So instead of entering based on this down here, you say, okay, this is a key low that we ran. If we reclaim this low, I'm gonna long. My risk is the move below the low. So the idea is that the move below the low was the deviation. If we get back above, I'm long. So how does that look in terms of a setup? We traded below, candle closed above, you buy the next retest, which would have been in this candle. Your stop goes below the deviation, target here. So this is effectively just a over under play. The low, lower low, higher low, the over under, the head and shoulders, whatever you want to call it. Maybe it's Maybelline, the Quasimodo, there's lots of names for it. That's exactly it right there. You have a key low, traded below it, reclaimed it. This is your entry. This is your risk. Target. Boom. And again, all my levels, fucking money. The best levels. When you're trading the range, okay, you have a low, a high, then what are you looking for? You're looking for a retracement into the range to get long, expecting this uptrend to continue. You have a low, here's your new high, retracement into the range. You're looking for reasons to get long for continuation. Where does this retracement occur? 50% of the range, the OTE, the sweet spot. Maybe we run all the way to the range low, right? So if we're in an uptrend here, maybe it's shallow, maybe it's just to the range high. Maybe the retracement runs a key low. Maybe we run the range low itself, but then get back in. These are all different ways that you can get in the trade, but the idea is when the trend is up, really it's just ranges that are stair-stepping their way up. So when you're in a bullish range, I'm looking for, if we get a move to the top, I'm looking to long the pullback because my expectation is the next move takes us to the top of the range or out. However, if we lose the market structure within that range, okay, well now maybe I have a clue that the range is actually going to be shifting to a bearish range, right? So now I'm looking to short, but it's not confirmed until it loses that market structure level. What is OTE? OTE stands for optimal trade entry. Big bounce right into the OTE, lower high. What happens before the trend shifts, right? You're in an uptrend. The first clue, maybe we get back under this high, but the second clue is, okay, here's our market structure level. Boom. Why am I not looking to short now? You need to be. We just broke market structure. Here's clue 1. We made a higher high, got right back below it. Clue 2, we broke market structure. Boom. So once we broke that 12-hour level, I posted on Twitter, I said 12-hour market structure broken. We basically retested the area, but if you zoom in, right at the level, SFP, bearish market structure on the hourly, bearish order block, pullback. There's your up candle that broke market structure, pullback, puke. And this was the exact setup posted in advance on Discord using concepts that I've shared with you guys. Range trade, market structure, order blocks, swing failure patterns, over unders, all of these things I've talked about over and over and over again in streams. This is just one example of them playing out. Bearish breaker is initially a bullish order block that fails and then it it becomes a bearish breaker. But the one rule is it has to violate a swing high. So let's assume you have price doing this, makes a higher high, and then it breaks down. Initially here, you would think that this is a bullish order block. It's a down candle before an up move, but then price nukes through it. And when it comes back to retest it, you can then use this as a bearish breaker, sell it with your stop above here or above the high. This is a breaker, a bearish breaker. So it's a bullish order block that fails, then becomes a bearish breaker. This was a bullish order block here. Down candle before an up move that made a higher high. You would assume that this is going to be support. So I would bid here. When it failed, you extend it out. We broke market structure. There's the retest to the underside. You can now sell it as a bearish breaker. Down candle before an up move that took out a high. Price nukes through it. Retest, dump. That is a breaker. So what would it be in reverse? Here's a bullish breaker. You would assume that this candle would be a bearish order block. Up candle before a down move that broke market structure. Price came down, did not respect it as a bearish order block, traded above, retest. That's your long. It's now a bullish breaker. So generally, a breaker involves taking a high or a low. Oftentimes, you're going to see these concepts. They're going to be layered on top of each other. Just pick one. I personally use breakers more than I use just straight up order blocks. What I like to do is find breakers within order blocks. Pick one. If it hits an order block, use the order block. But generally, I like the breaker because an order block can be like this. And price can come down to it, make a swing low, start moving away, then it can do this. The order block's now been invalidated, but if it does this, you now have a breaker in here. And I like that because then it gives you really clear defined risk. Order blocks work on all time frames. As long as you're working in a top-down analysis fashion, you can do order blocks on the 5-minute chart. It doesn't matter. But if you're trying to determine if a daily move is going to happen based on a 5-minute order block, that's not right. Top-down analysis. High time frame, then low time frame. As long as you're doing that, order blocks work on all time frames. The stop goes where the idea is wrong. So let's say you're shorting this breaker setup. Your entry is on this retest. You could put your stop here, that's the breaker stop, or you could put your stop at the high that the breaker caused. Where's my trade idea wrong? Technically, if it gets back above the breaker, it's wrong. It's absolutely wrong above here. Now, what you're not gonna do, like let's say you enter here, you're not gonna put your stop right here. Why? Because it could do this. It could go all the way to the top of the breaker and then sell off. You're gonna be pretty pissed. If you're putting your stop there, like you get filled right away, then you put a super tight stop at that candle high because you want some super high reward to risk trade, that's not the right logic. You put your stop where the trade idea is wrong, not so it gives you the RR that you want. If the RR on the trade based on where your stop has to go, because that's where the trade idea is wrong, if the risk reward is maybe it's a trade. So let's say you shorted here, your stop has to go here because this is where you're wrong, but your target was only to here. Well, maybe that's not such a good trade. Your stop goes where the idea is wrong, not just so you can have a pretty RR that looks good. Boys, we're taking over TikTok. You guys aren't following me on TikTok. I don't know what the you're doing. All of the stuff that I talk about that's smart in these streams. So I do a 2-hour stream and my editor finds like 5 minutes of stuff where I'm coherent. He cuts that up and he posts it on Instagram and TikTok. So if you just want the straight juice, the straight alpha on TikTok, soon to be neck talk, that's where the real alpha is. Follow me there.